Good afternoon. Welcome to the weekly Livestock Market update. I'm Brownfield Anchor reporter Meghan Grebner with us as always to talk all things markets. University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
All right, today we're going to talk trade. We're going to talk some jobs and recap what happened this week in the markets to kick us off. So what happened this week?
Yeah, if we start on the cattle side this week, Megan, we saw lower prices for live fed cattle this week, down nearly $4.60. That still puts them about $30.50 above where we were a year ago at this time. On the feeder cattle side, those auction markets this week were by and large steady, with calves up $2 to $4. On the future side, June live cattle futures contracts were down nearly $3.50. And the August feeder cattle contract was down hard this week, down nearly $9 on the week. Choice box beef price was up 22 cents. On the hog side, cash barrels and gilts were $1.80 higher this week. The June lean hog futures contract took a hit as well this week, down about $8.15. We gained $1.90 on the pork cutout value this week.
I think interesting talking about the choice box beef price. While only up 22 cents for the week, it's a stark contrast from where we were a year ago.
Yeah, absolutely. So just a modest $51 higher than where we were a year ago. I joke when I say that. So the choice box beef price has been strong. I think that's helped to support live cattle prices, fed cattle prices, as we've looked over the last several weeks. And we're probably not done when we talk about higher box beef prices in the months ahead as we think about how tight cattle supplies are going to become.
Feeder cattle down relatively hard this week. There's been some strength in corn. Is that primarily where we're pulling that from? Or is it just kind of a little bit of a turn?
So I think it's both of those things. I think a little bit of a turn. We've been on a pretty good roll there as well until we look at what's happened this week. I do think we are seeing some dry areas. We're seeing some places maybe where planting isn't progressing quite as quickly as we otherwise would have thought. We were up 13 cents on July corn futures this week. So we're still in this kind of, it all depends a lot on current weather. If rain comes at the right time, we probably push corn prices lower. If rains don't come at the right time, those corn prices could move much higher. So we're kind of that critical piece here where I think some people are seeing some dry right now and maybe a little more concern about what that corn crop looks like.
Let's talk weekly slaughter numbers. Start first with cattle, and I want to talk a little bit about hogs. Obviously, the fire last week impacted those numbers. I'm assuming kind of getting that house in order is helping to see some of those slaughter numbers rebound this week.
Yeah, that's right. On the cattle side, a run of 623,000 head, according to USDA for the week ending May 6th. That is down 1,000 head from last week, but down 38,000 head from where we were a year ago. On the hog side, a run this week of 2.447 million head of hogs this week. That's 60,000 head above a week ago. And I think that's some recovery from the fire issues that you mentioned earlier. And it's 42,000 head more than we slaughtered a year ago at this time.
When we look at that year over year pace, how are we running for both cattle and hogs?
Yeah, so we continue to see cattle below a year ago, so down 3.3%. While on the hog side, we are 1.6% above where we were a year ago when you look at year to date numbers.
Monthly trade data, big report out this week. I want to say that pork is probably a really big story, but I feel like this number on the beef exports is also telling a little bit of a story as well.
Yeah, that's right. So you look at March 23 data that we got this week, total U.S. beef exports, nearly 286 million pounds. That is down 18 million pounds from where we were a year ago. When you look at the individuals here, so Japan down nearly 8 million pounds, South Korea down a little more than 3 million pounds, China down nearly 6 million pounds. Mexico's the bright spot, up 4. Everybody else down a little more than 5 million pounds. So a lot of what we saw was lower exports relative to a year ago in this report. You look at the quarter, so we now have the first quarter of 2023, that's down 67 million pounds relative to the first quarter of 2022. Here we can talk about South Korea and China really being the two markets that have moved lower over the first quarter of this year relative to a year ago. On the pork side, a little different story here. So pork exports up 64 million pounds in March of this year relative to where we were a year ago. Higher to Japan, up about 5 million pounds. Higher to South Korea, up a little more than 13 million pounds. Up to China, nearly 4 million pounds. Mexico continues to be strong, up 21 million pounds. The all other here, so everybody else also up 21 million pounds. It goes to some of the Central American countries who I think have been strong as well. The first quarter of 23 on the pork side, up nearly 128 million pounds. That's really China, Mexico, and everyone else. So everyone else up 65 million pounds for the first quarter of this year relative to 2022.
I think it's interesting thinking about that all other else category and the importance of the work being done to grow export markets to make sure all of our pork or all of our pork is not in one grocery basket.
Correct. You don't want all those eggs in one basket, and developing a number of countries important, I think, just as a good risk strategy so that you don't depend on one country for trade. You depend on a lot of countries in case one were to slow down or maybe some political event happens. You know, China is always the one we go to here of important from a trade standpoint, but depending too much on one country can have implications longer term.
Jobs report, as we take a look at the numbers for April, how did they stack up in comparison to pre-report expectations?
Yeah, so we added 253,000 jobs in April. You know, although the economy, when we looked at the first quarter, up 1.1%, I think it was a surprise that 253,000 jobs. Pre-report would have suggested a growth of about 180,000 jobs. So we beat that pre-report estimate. Unemployment rate, 3.4%. That's tied for the lowest level since 1969. And on the wage side, so good and bad news here, I guess. So wages are higher. Our average hourly wages up 0.5% for the month. They're up 4.4% relative to a year ago. Both of those were higher than expected. That might point to inflation still a little problematic. We did see some revision in some previous months. March in particular, they went back and adjusted to 165,000 jobs. That was down from 71,000 in their initial estimate. So we are seeing some revisions downward in the previous couple of months. February, they also revised down about 78,000 jobs.
When we look at, while wages are up compared to where they were a year ago, how are they trending with inflation? Is it enough to make a difference, or is it still like, while it's higher, it's not enough to offset some of the higher costs that we're seeing, specifically in terms of food, gas, all of those things that are part of our disposable income?
So I think the point here is we continue to see enough of an increase in those wage rates to support higher prices for goods because consumers end up with more money in their pockets to spend on things like food. And so I think the idea is when we ramp up interest rates, try to cool the economy, we eventually at some point hope we slow maybe perhaps the rate of wage growth as we look ahead. And I think that's the piece of the puzzle here that still continues to confuse of how much do we have to raise rates to eventually cool off that job market. Now, I think we got earlier this week some job openings numbers that would have suggested maybe some slowdown, being below 10 million new openings for the first time in a while. So perhaps we're seeing some signs, but it's an interesting conversation when we're trying to cool inflation. Yet we do want demand growth. So how we balance those things gets a little tough, I think, right now.
Before I let you go today, I don't think we can have to talk today and this week without having a conversation about the drought monitor. I know your state of Missouri is pretty challenged in some areas, not to mention just dry, but it's been cooler. It's been it's not great in some parts of the country, as we're already talking about tighter cattle supplies and all of these things that are happening. How impactful is that drought monitor into what happens with our cattle herd moving forward?
Yeah, so you continue to remind me we have to keep talking about this because not only are we currently dry in some places, but there is really no built up subsoil moisture to offset current dryness. So you look at the map today, frankly, Nebraska, Kansas, Oklahoma, some into Texas as well. Those areas remain extremely dry. And here in Missouri, kind of have I say cigar shape from southwest all the way to the northeast corner that's become dry fairly quickly. It takes current rain to keep hay and pasture growing. It keeps current rain to keep a better corn crop in the bin this fall. So this early dryness just reinforces the need for timely rains during the growing season. I think it's tough to talk about a lot of cow growth in the states of Nebraska, Kansas, Oklahoma, and possibly Texas as we look at the current situation for 2023. I think that sets us up for fewer cows again in January of 2024 right now, Meghan.
Definitely will give us something to talk about in the weeks and months ahead throughout the growing season.
That's right. Let's hope we get some rain coming here. Looks like we're going to get some warm temperatures here over the next few days as well, which is not what we need on top of dryness right now.
Scott, I think that'll do it for this week. As we look ahead to next week, we're going to talk more consumer and demand portions with retail prices and consumer sentiment. What are some things you're looking forward to and looking for out of those reports?
Well, I think number one, just where consumer sentiment is going to be important to the demand picture. I expect some retail price data on the beef side, maybe to start to show some increases. And we'll also get USDA's next WASDE report as well next week. So get a little bit of look at what USDA is seeing in those S&Us for both crops and livestock will be important.
Well, we can't wait to chat with you next Friday. Scott, have a great weekend and a great week.
Hey, you do the same, Meghan.
Thank you, sir. To have our weekly livestock market update delivered to your email box every Saturday morning, go to brownfieldagnews.com. You can also submit questions and comments there as well. And for market updates every day to see what happened, check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.